We recorded a trade surplus of $4.14 billion in the first 4 months of 2025, with exports growing by over 60%, mainly from gold, cocoa, and oil. And I must admit, given the vulnerabilities that arise when your economy is virtually based on the exports of raw commodities, then you have to take measures to protect against the shocks that could arise. And let me say that we are currently working on a price hedging program, such that even if gold prices ultimately suddenly fall, we are able to limit the consequences therefore. A friend of mine said, crypto is like the air we breathe. You can't stop it. It goes everywhere. It takes place everywhere. And so all you have to do is to develop the systems to be able to minimize the risks and allow these to play out.
In 2022, Ghana's economy hit rock bottom. The cedi collapsed, losing more than half of its value. Inflation shot past 54%, and the country defaulted on its debt for the first time in history. But now, in 2025, Ghana is bouncing back and doing something big to protect its future. Thanks to a surge in gold production and record high prices, Ghana's gold exports jumped by 76% this year, reaching $5.2 billion just between January and April. That massive boost has pushed the country's foreign reserves to $11.1 billion, enough to cover almost 5 months of imports. The cedi has also rebounded, gaining over 40% against the US dollar this year, and is now the second best performing currency in the world, only behind Russian ruble. But there is a risk. Gold prices are higher today, trading over $3,300 per ounce, but they won't stay there forever. If prices crash tomorrow, Ghana could lose billions in export income, shrink its reserves again, and spiral back into crisis as it witnessed in 2022. That's why the Bank of Ghana is now working on a gold hedging program. This is like buying insurance for the country's gold. They want to lock in today's high prices so that even if gold crashes later, Ghana still get paid well. This strategy isn't new. Countries like Mexico has used it for years to protect its oil income, saving billions when oil markets went down. Ghana is learning from its 2022 collapse. It's also watching what happened to countries like Sri Lanka, Argentina, and Zambia, where over-reliance on a single import led to economic disaster.
We have reached a critical turning point. Today, the cedi has not only stabilized, and I did not say strengthened, stabilized. It has strengthened significantly, supported by robust external buffers, prudent monetary policy, coordinated fiscal consolidation, and renewed investor confidence. We now have to move from stabilization to sustainability and from headline gains to real sector benefits. And that is the heart of our conversation this morning. So let me begin by outlining the facts. And as I mentioned, this type of conversations should be based on the facts. The local currency has appreciated by over 42% year to date, that is as at end of June 2025, and has reversed nearly all the losses that were incurred in 2022 and 2023. Our gross international reserves now stands at $11.1 billion. And as I said, accounting for about 4.8 months of imports cover, which is up from 8.98 billion at the end of last year. We recorded a trade surplus of 4.14 billion in the first 4 months of 2025, with exports growing by over 60%, mainly from gold, cocoa, and oil. And I must admit, given the vulnerabilities that arise when your economy is virtually based on the exports of raw commodities, then you have to take measures to protect against the shocks that could arise. And let me say that we are currently working on a price hedging program, such that even if gold prices ultimately suddenly fall, we are able to limit the consequences therefore. Now, the current account surplus improved significantly to 2.12 billion as at the end of the first quarter of this year, and you can compare that to a mere 66 million during the same period last year. Managing contradictions and addressing deeply embedded structural challenges. So we know that there are risks. First, the risk of volatility remains real and persistent. Our current account and reserve strength are still largely dependent on a few commodity exports, as I mentioned, talking about gold, cocoa, and oil. These sectors are highly vulnerable to price fluctuations driven by factors beyond our control. For example, gold prices, which have significantly boosted our export earnings, are currently above 3,200 ounce, influenced dollars per ounce. And these are influenced by geopolitical uncertainty, including the recent Iran-Israel conflict. But while beneficial for now, colleagues, a future correction in prices could quickly narrow our trade surplus. Moreover, Ghana's import profile is heavily skewed towards energy, capital goods, and essential commodities. And this creates seasonal forex demand spikes, particularly in the second half of the year. So without diversification, even small shifts in global sentiment or commodity cycles can trigger renewed pressure on the cedi. And as I mentioned, we are entering into a hedging program to be able to stem some of these risks that may arise in the future.
But gold isn't the only thing on Ghana's radar. Cryptocurrency is also booming, and the central bank is taking notice too. Ghana is now finalizing a legal framework to regulate crypto exchanges and platforms. The goal is to stop money laundering, protect the economy, and make sure innovation strengthens, not weaken the financial system.
Then we are also finalizing a regulatory framework for virtual asset service providers, or what's known as the VASPs. This will bring cryptocurrency exchanges and digital asset platforms under formal oversight, aligning them with AML/CFT rules and ensuring that digital innovation supports rather than undermines FX control and monetary stability. It is a fact, colleagues, that crypto is a big thing in Ghana. We can pretend, we can look the other way, but reality is that it's impacting. And so therefore, as the regulator, and together with other regulators such as the Securities and Exchange Commission, GRA, and others, we are joining efforts to engage in regulating that activity and to ensure that the benefits accrue to us while minimizing the risks. A friend of mine said, crypto is like the air we breathe. You can't stop it. It goes everywhere. It takes place everywhere. And so all you have to do is to develop the systems to be able to minimize the risks and allow these to play out.
In simple terms, Ghana is trying to build more sustainable and shock-proof economy, one that can survive global price crashes, currency shocks, and digital disruptions. The country has momentum now, but whether it can hold onto it depends on smart planning and a bit of luck. And that is all for today's episode. Thank you very much for watching. What do you think? Is Ghana finally securing its future? Let us know in the comment section below. My name is Sheriff Haruna, and this is AS1 Report. Have a joyful life and see you in the next one. Macrao.